In this lesson, we will discuss income. Specifically, we'll talk about wages, we'll talk about Social Security benefits, and we'll talk about unemployment benefits. The objectives for this lesson, and also the next couple of lessons, will be to recognize various types of income documents and summarize the taxability of each type of income to the taxpayer. As you should remember from the tax terminology section, not all income is going to be considered taxable income. So taxable income is going to be any income that is subject to federal income tax, and it includes wages, tips, interest, alimony, IRA distributions, non-employee compensation, self-employment income, gambling winnings, jury duty fees, refund of state taxes, lots of things here. This is not an exhaustive list of taxable income, but these are the most common sources that we will see at our SaveFirst sites. So you should become familiar with these. We're going to be talking about all of these throughout this training course. Now, just as we have taxable income, we also have some non-taxable income that taxpayers may bring to the site. These sources of income are exempt from federal income tax, and they include child support, gifts, life insurance proceeds, other insurance payments, sickness or injury payments. We also have public assistance payments, workers' comp, veterans benefits. We have something called supplemental security income, inheritances, and also just federal income tax refunds. These are not taxable, and therefore you will not report them on the Form 1040 since they will not affect tax liability. If you ever have a question about whether a type of income is taxable or not, you can actually go ahead and open the Publication 4012 to the Income tab. There's a page listed in the Income tab called the Income Quick References Guide that has a more complete listing of taxable and non-taxable income. So you can open your Publication 4012 to that now and see many other different types of income that I did not list on these previous slides that we may or may not see at our sites this year. As you should remember from the tax terminology lesson, earned income is income received through work. And those include wages, salaries, tips, self-employment income, etc. Unearned income is income other than pay for work. And it is produced by investments, so that would be such as interest on savings, dividends on stocks, Social Security benefits, as well as retirement savings. All of those are considered unearned income. One of our previous core members liked to think of earned income as income you work for and unearned income as income that works for you. I think that's a good way to describe the difference between earned and unearned income, and it will be especially helpful when you need to discern how much earned income a taxpayer actually has. So why is it necessary to know that difference? Well, the main reason is because the amount of earned income received corresponds to the earned income tax credit and how much that credit is worth. So it's important to know the difference, especially to combat misconceptions among taxpayers about what qualifies for the earned income tax credit. Okay? We'll obviously be discussing this concept much more thoroughly when we talk about refundable tax credits and the earned income tax credit in a later lesson. But just be aware that throughout all these income lessons, we're going to be making a distinction about whether it is earned income or whether it is unearned income. We will begin with the form W-2. It's appropriate that we begin with this form because it is by far the most common tax document that you will see at our SaveFirst tax sites. It's got a lot of information reported on it, much that you're going to need to internalize. But also much of the information that can be reported here, you just need to know where to find what it means. So it's not going to be necessary to memorize every piece of information on this page, but just it's really important to kind of know where to find that information if you need it. Okay? So let me briefly call your attention to the parts of this form that we will be taking a closer look at in this lesson. So first we've got box 1, wages, tips, other compensation. This is just going to be the amount paid to the employee during the tax year. Box 2 is going to be federal income tax withheld. This is going to be the amount of federal income tax withheld from the taxpayer's wages for the current tax year. The next couple of boxes, boxes 3 through 7, are related to FICA taxes, or Social Security and Medicare taxes. We'll talk more about what that means in a moment. Box 8 listed there is called allocated tips. We'll talk about the difference between allocated tips and just regular tips in a moment. Box 10 is dependent care benefits, which are provided by the employer to the taxpayer. Box 12 shows a variety of standard codes, some of which you will learn to immediately recognize and will require you to take further action, and some of which you will need to look up using your resources to determine whether or not you need to do anything further with them. Box 13 has a couple of various boxes that may or may not be checked. This could change how the income is reported or even whether or not it needs to be reported. So we'll talk about what each of those means later on. Box 14 is listed Other. However, much like Box 12, it will show a variety of codes or other information. However, these codes are not always clear and they might require additional investigation to determine if anything listed is necessary to complete the return. Boxes 16 through 17 at the bottom, they show the amount of wages attributable to a particular state. So you see it's got state wages and tips, and the amount of state income tax withheld will also be listed. Boxes 18 through 20 show the amount of local wages and income tax withheld if applicable to the taxpayer. All right, so let's go through each one of those a little bit more thoroughly. All right, so first we have wages, tips, and other compensation, which is reported in box 1. This is just going to be the total amount of wages, tips, salaries, bonuses, commissions, etc. that is going to be paid to the employee for the entire tax year. Okay, so this is going to show the full amount that they received to their accounts for the year for their job. It's important to note here that wages, tips, other compensation, this is going to be classified as earned income. Now we'll talk about federal income tax withheld, which is reported in box 2. We've already talked about this a little bit when we were discussing tax terminology, but just a reminder of that, the federal tax system is a pay-as-you-go system, meaning that tax is paid as income is earned during the year. This tax paid is referred to as withholding. The amount reported in box 2 is going to be the total amount of tax that was withheld for each pay period. It'll be calculated up and added up for the entire year in that box. This amount is going to be determined prior to starting a job by filling out a Form W-4, which looks like this. You may remember having to fill one of these out when you started working with Impact America. Also, you would have filled out one of these before starting any prior job that you may have had. So what this is basically a miniature income tax survey, which allows the employer to see kind of what your personal situation is to help determine how much they may need to withhold from your pay. So you'll have what's called personal allowances listed here. So this form is going to ask whether you're single or married, whether or not you have any dependents and how many you have. It'll ask information about your spouse and whether or not the spouse works, as well as whether or not you have any child care expenses. So all of these added up are called your personal allowances, and the number of personal allowances is going to help determine how much the employer withholds from pay. Okay. Ideally, the amount of federal income tax withheld on wages should be enough to cover any potential tax liability the taxpayer may have at the end of the tax year, which is why filing a federal tax return is akin to settling up with the federal government. Okay? So the taxpayer has already been paying tax to the federal government throughout the year. We're just trying to determine now if the taxpayer paid too much or too little. Of course, many taxpayers that we serve end up getting a full refund of their federal income tax withheld because they receive enough in tax credits to wipe out that tax liability. The next section of boxes in the Form W-2 are related to FICA taxes. So first of all, what is FICA? Okay, it stands for the Federal Insurance Contributions Act, and essentially what FICA taxes are is they are employment taxes that are imposed on both the employee and the employer specifically to fund two federal programs, Social Security, and Medicare. Okay? So the Federal Insurance Contributions Act, or FICA for short, is the part of the Internal Revenue Code that gives the federal government the authority to collect these taxes. Okay? So we'll often refer to these as FICA taxes. You may also occasionally hear these taxes referred to as payroll taxes or employment taxes, FICA taxes. Those all mean the same thing. Social Security, Medicare taxes. The taxes imposed on wages vary from year to year, but typically it centers somewhere around 12% for Social Security and 3% of wages for Medicare. Okay? So the employee is going to pay half of that cost, and the employer is going to pay the other half of that cost. Okay? So boxes 3, 5, and 7 are going to show how much of the employee's wages are subject to these FICA taxes, and boxes 4 and 6 are the actual FICA taxes withheld from pay and are actually separate from federal income tax withheld in box 2. So for example, in 2014, the employee would have paid 6.2% of their wages in Social Security tax and 1.45% of their wages in Medicare tax. These collectively are referred to as payroll taxes, and unfortunately, unlike federal income tax, do not factor into the total tax liability that is calculated when filing a federal tax return. Meaning that a taxpayer cannot be refunded this tax that was withheld, even if they end up not needing to file a tax return for the year, because they don't have any additional tax liability. These are simply a tax that the taxpayer has imposed upon them for holding a job. Okay. Just a side note, taxpayers who are self-employed workers or non-employee contractors are also required to pay FICA taxes on their income, even though most of the time they will not receive a Form W-2 for that work. However, they do not have an employer to pay half of their FICA taxes, so they're actually on hook for 100% of these taxes. All right, that's going to be really important to note, but we'll discuss that in a lot more detail in our next training when we discuss self-employment business income. Allocated tips in box 8 apply to taxpayers working in a job that receive tips. So that would be waiters, waitresses, bellhops, etc. Most tips are going to be totaled up in box 1 with wages. However, allocated tips are listed separately. So what are allocated tips? Allocated tips are the difference between the tips the employee reported to the employer and what the employer designated the employee's tips should have been. Okay? So the reason that these are separated out from box 1 wages is because FICA taxes have not been withheld from allocated tips. FICA taxes must be paid on this additional amount when filing a federal income tax return. We're going to discuss how these taxes are reconciled in a later training, but there's an additional form that's got to be filled out when filing the return to pay those taxes. All right, the next box, box 10, is dependent care benefits. So sometimes an employer provides dependent care benefits that are paid either directly to the employee or on the employee's behalf for dependent care expenses. Okay? Usually this goes to a daycare. If there's ever an amount listed in box 10, an additional form must be completed, the form 2441. This form is used whenever the taxpayer claims the child and dependent care expenses tax credit. So we'll discuss this form in much more detail when we get to that training, the non-refundable credits training. But just know that an amount in this box will require additional action outside of the W-2. Box 12 is going to report a variety of amounts with corresponding codes. These are going to be a standardized set of codes as well, so you will be able to look up what these are. The information listed here may be needed to complete the tax return, but often the information conveyed through box 12 codes are just that, they're information, and they don't require any additional action. However, it's always important to look it up just to see. So here are some common box 12 codes that we'll see. And just kind of a brief description of what they are. We have 401k retirement contributions, which are going to be code D. This indicates that a taxpayer had contributions made on his or her behalf into a retirement account. And a taxpayer might actually be eligible for a retirement savings contribution tax credit if there is an amount listed here with code D. Then we also have non-taxable sick pay, code J. This code indicates that a taxpayer had sick pay. Often, depending on the circumstances, this is considered non-taxable, and in this case it would be, since it's listed as code J, non-taxable sick pay. Then we also have employer contributions to a health savings account. So sometimes employees have what are called health savings plans, which are tax-advantaged medical savings accounts that can be used to help cover medical expenses. And employers often contribute to these health savings accounts, and the amount listed that they contribute will be listed in box 12 as code W. So this is another example of when an additional form would need to be completed outside of the W-2 as a result of this code. And then finally we have cost of employer-sponsored coverage, which is code DD. This indicates the cost of whatever the employer-sponsored health insurance plan that was provided to the employee. There are no additional forms directly associated with this code. However, recognizing this code will be useful later when we discuss the Affordable Care Act and how that relates to the income tax return. Okay? So these are some common ones that you'll see and that you should be able to recognize, and some of these may require some additional action on your part when filing the return. Box 12 information can be found in your Site Coordinator Handbook. Okay? You should have a Site Coordinator Handbook. You can look up those codes and a description of them. You always need to look up unfamiliar Box 12 codes. These codes may indicate that a taxpayer is eligible for a tax credit, or they may require that additional forms be completed. So this is extremely important that you do not ignore Box 12 codes. All right, the next box, box 13, has a variety of checkboxes that may or may not be checked. So the first one is retirement plan. It may be checked if the taxpayer makes contributions to a retirement plan through the employer. So that's just showing that they made some type of contribution to the retirement plan and may help them qualify for a tax credit. Then we have third-party sick pay. If that is checked, then the amount in box 1 is going to reflect the amount of sick pay that was paid to them during the year, and this is not going to be taxable. The third box, statutory employee, this is going to be checked if the income should be reported as self-employment or business income. Okay, we're going to discuss that in our next lesson, so you can hold on to that for now, but just know that that is important if that box is checked. The next box, box 14, is going to list other various information reported by the employer. Okay? The information listed here is not always clear, even to the taxpayer. Okay? There's no standard list of codes, and employers can really list any description that they choose. If the code can't be determined, it might be beneficial to contact the employer because it's possible that it actually could give the taxpayer a tax benefit. So for example, sometimes an employer might list an amount contributed to a specific retirement account here that might make the taxpayer eligible for a tax credit. So it's really important to determine what those codes mean. It's best to use your resources first to try to determine what a box 14 code is. So your Site Coordinator Handbook has some common ones that we'll see listed. You can also use some other IRS resources that we'll discuss later that may help you to determine that. If you still cannot determine it from your resources, though, try asking the taxpayer. They might actually know what it's referring to. However, if both of those fail, it still might be beneficial at this point to have the taxpayer call their employer for clarification on this code and what it might refer to. Okay? Remember that our goal is not only to accurately prepare the tax return, but it's to make sure we can claim every benefit the taxpayer is eligible for. And we wouldn't want to leave those on the table by ignoring the box 14 code if we aren't sure what it means. So here are some examples of things that are reported in box 14. Employer may report union dues that the taxpayer paid. They may report some health insurance premiums that were deducted from their pay. They may also report other various non-taxable income that they received throughout the year. They may also report some education assistance payments, as well as various types of retirement plan contributions. So sometimes the information reported here might be able to be used when itemizing deductions, depending on whether or not it is a pre-tax benefit or a post-tax benefit. So what exactly does it mean to say something is a pre-tax benefit versus a post-tax benefit? I think it's appropriate to go ahead and talk about this here now. We're going to be talking about what a pre-tax benefit versus a post-tax benefit means a whole lot more when we start talking about retirement in Unit 2, as well as some other things in Unit 3. But I want to go ahead and mention it here just so you can kind of go ahead and understand what it means, because occasionally there will be things reported in Box 14 that may be able to be used elsewhere to benefit the taxpayer. Okay, so when we talk about pre-tax benefits, any employee benefit that is offered pre-tax is going to reduce taxable wages. Okay, so the employer is going to take these benefits out of wages before withholding taxes from the employee's paycheck. So, for example, a taxpayer may have health insurance premiums deducted from their pay before they actually have taxes withheld. So they're not going to be paying taxes on those specific benefits. Okay, this is going to lower their taxable wages, and it will actually give the employee more take-home pay. Okay, so here are some examples of pre-tax benefits that we might actually see reported on the W-2. So some qualified 401k contributions. 401k is a retirement account. Those could be pre-tax. We have something called a Section 125 cafeteria plan. This is just a mixing of different types of benefits, including health, life, and accident insurance. Those could be pre-tax benefits that are deducted from wages. Contributions to a health savings account can be considered pre-tax benefits, as well as dependent care expenses. Okay. So going back to Box 14 of the Form W-2, if health insurance premiums listed here are considered a pre-tax benefit, we would not be able to use this information when itemizing deductions, for example, because they've already gotten one tax benefit from the premiums. Okay? They lowered the employee's taxable wages. We'll discuss itemized deductions more thoroughly in Unit 2, but be aware that information on the Form W-2 may be useful in determining itemized deductions. Okay? Any employee benefit offered post-tax do not reduce taxable wages, but they may be eligible to be claimed as an itemized deduction. Unlike what we just discussed with those health insurance premiums that were deducted pre-tax, had they been deducted post-tax, they might be eligible to be an itemized deduction. The reason is these benefits have not already been taken out of wages. Okay, so they might be eligible for another tax benefit, such as an itemized deduction. Some examples of post-tax benefits would include Roth 401k contributions. Okay, that's also a type of retirement contribution. So you can have pre-tax and post-tax retirement contributions. Okay, union dues would be considered post-tax benefits, as well as disability or health insurance, as long as they aren't included as pre-tax benefit. Okay, so some things could be both, and that's why it gets a little confusing. And often it's not clear when looking at the W-2 if they are pre-tax or post-tax. Okay, this is something you would just have to confer with the taxpayer or possibly the employer if you believe it might benefit the taxpayer. So again, back to Box 14, benefits given post-tax may be eligible for an itemized deduction. These benefits were not taken out of wages, therefore there has been no tax benefit associated with these amounts. Okay? However, note that just because a benefit is considered post-tax doesn't automatically mean it's eligible to be claimed as an itemized deduction. All right? We will be discussing the rules governing itemized deductions much more thoroughly in Unit 2. Just be aware that this Box 14 other section may have information that we need for itemized deductions or other various tax benefits. Our next section would be state and local wages and tax, and that's going to be reported down in Box 16, 17, 18, and 19. Okay. Some states also have an individual income tax. So those would be Alabama, Mississippi, South Carolina, Louisiana, Georgia. There are many other states that also do. These are the more common ones that we will see at our sites, however. Some states do not have an individual income tax, and there will therefore not have anything reported in those boxes if that's where the taxpayer lives. So example of that would be Tennessee and Florida. So if you're working in Alabama, you will definitely always see Alabama state income tax. You may also get some taxpayers occasionally from Mississippi or Georgia who have moved into the state at the end of the year and they had some taxable income from those states. However, those of you that are in Tennessee, or in Florida, you likely will not see state income tax reported very often unless you have taxpayers who worked in other states. So state wages are going to be reported in box 16, and state income tax withheld is going to be reported in box 17. Okay. Note that some localities also impose income tax. Local wages are going to be reported in box 17, and the local tax is going to be reported in box 18. Okay. So for example, Birmingham, Alabama often has, depending on where you live in the Birmingham metro area, may have local wages attached to your income, and a local tax will be also included. State wage and tax information is going to be used to file the appropriate state income tax return, which will be covered in a later training for those that it applies to. And that concludes our discussion of the Form W-2. Now let's move on to our second form of income, which is Social Security benefits. Social Security benefits are going to be reported on an SSA 1099. This is what this form looks like. So let me just briefly highlight some of the important boxes that we'll be using on the Social Security benefit statement, much like we did for the Form W-2. So box 5 is going to report the net total benefits for the tax year. This is the important number to use when you're reporting Social Security benefits on the income tax return. So you'll notice here in box 3 there's an amount listed here, benefits paid. Box 4 says benefits repaid. These numbers you can ignore, all right? In general, this is the number that you need, box 5, net benefits for 2014 or whatever the tax year is, okay? It is going to be highlighted in gray, so it'll be easy to recognize. Box 3 is going to report a variety of different things, okay? The top of box 3 is going to show the amount of cash paid to the taxpayer throughout the course of the year. Okay, so you'll see in the example here it says paid by check or direct deposit, $10,925. You'll notice that that is different from the amount listed over here in box 5. This is the amount they actually received in cash. The next box records the amount of Medicare premiums that were deducted over the course of the tax year. So in addition to the cash paid through Social Security, this also is going to show how much Medicare was deducted from their benefits. Okay. It will also show Medicare prescription drug premiums deducted from benefits. So if you add up the amount paid by check or direct deposit and these two amounts, it's typically going to equal what is here in box 5. Okay. Now the bottom of box 3 is going to show the total additions, so it'll show the total amount. That's going to match whatever's up here in box 5. However, it can also report lump sum benefit payments. There's nothing listed here showing lump sum benefit payments, but it can show that. Those are just payments made to a taxpayer for a prior year. Box 6 is going to note any federal taxes that were withheld. Okay. So let's talk about each one of these boxes in more detail. Net benefits are going to be reported on box 5. Okay. Social Security benefits can include monthly retirement, survivor, and disability benefits. Okay, so retirement, that would be just what they receive post-working. Survivor benefits could be what a spouse receives for their deceased spouse. And then disability benefits can also be included in this if a taxpayer is not able to work due to a disability. Now, the amount listed here in box 5 does not include what's called Supplemental Security Income, or SSI. Many of our taxpayers will have this. They may mention it, but SSI is aimed at helping low-income elderly, blind, and disabled individuals pay for basic needs. Okay, this is not going to be included in this amount, and it is not going to be considered taxable. But just so you're aware of what SSI is, just in case a taxpayer asks about it or mentions that they have it. All right. Now, Social Security benefits are going to be classified as unearned income. So some portion of the Social Security benefits might actually end up being taxable. Okay? Generally, if Social Security benefits are the only source of income, they are not going to be taxable. Whether or not Social Security is partially taxable is going to be dependent upon filing status as well as other reportable income that the taxpayer has for the entire year. We really can't determine that until we actually enter it on the tax return. Now, as I mentioned earlier, SSI, supplemental security income, is never taxable, and so we'll never need to include that when reporting Social Security on the return. All right, so the next section in box 3 is going to report Medicare premiums. Many taxpayers will have Medicare insurance premiums, and those are called Part B Medicare, and or Medicare prescription drug premiums, called Part D, deducted from their benefits. Okay, so this is important to note because these amounts can be used when itemizing deductions. So when we learn how to put these on the tax return, there will be a place to enter those amounts to be transferred to and used for itemizing deductions. Now, most taxpayers will have no federal income tax withheld from Social Security benefits, but if they do, it will be reported in box 5. Most won't need to have federal income tax withheld because it won't be taxable, but you need to make sure that you do always look at this box to see if there is any federal income tax withheld from benefits, because they may have chosen to have some withheld from it. Okay, this is a voluntary, it's not required, but again, they may choose to have federal income tax withheld if they know that their benefits are going to be partially taxable due to other income that they may have for the year. Okay, so make sure you're always looking, because it can be really easy to miss this amount if you aren't looking for it. Also reported in box 3 can be lump sum benefit payments. Very rarely a taxpayer's Social Security benefit statement may report that the taxpayer was paid a lump sum amount for the current tax year as well as for a prior tax year or tax years. Okay. This is important to note because the taxpayer has a couple of different options in reporting these amounts, which will affect how this information is entered on the tax return. So first, the taxpayer might report the entire payment as it was received in the current tax year, or they might actually separate out those payments based on the year received and record taxable benefits appropriately. Okay, so it'll tax them according to whatever their situation was for that year. Okay, taxpayers can choose that second option if it lowers their taxable benefits and thus provides them with a lower tax liability. But we're not going to cover in detail how to report lump sum payments just because of how rare the circumstance is. But I just wanted to make you aware of it in case it does come up. And note that the information on how to report it correctly can be found both in the Publication 4012 and the Site Coordinator Handbook. Let's move on now to Form 1099-G, which is called Certain Government Payments. Okay, let's just briefly look at the boxes here that we'll be using. For now, we're going to focus mostly on box 1, which is unemployment compensation. Okay, so these will be unemployment benefits given to the taxpayer for the year. You might also occasionally see something reported in box 2. Box 2 is state or local income tax refunds, credits, or offsets. You may also see something here in box 4 for federal income tax withheld. Okay. All right, so unemployment compensation, like I said, is going to be reported in box 1. This is just going to show the total amount of unemployment compensation that the taxpayer received for the entire tax year. Okay. It's going to be fully taxable income and must be included on the return. Unemployment is going to be classified as unearned income and thus cannot be used to help a taxpayer receive the earned income credit. Box 2 is going to report state or local income tax refunds, credits, or offsets. This is basically showing state tax refunds from the previous year. Okay. These amounts may actually end up being taxable on the federal tax return for the next year. We're going to come back to this in a later training. Okay, we're going to discuss this more fully in Unit 2, but just be aware that there might be an amount here in Box 2 that needs to be addressed. Federal income tax withheld will be reported in Box 4. Taxpayers can choose to have federal income tax withheld on employment compensation. Some may not. It just depends on how much the taxpayer has in unemployment compensation and whether they chose to have any withheld. So this concludes the lesson on wages, Social Security, and unemployment. Now you should be able to recognize the Form W-2, the SSA 1099, and the 1099-G, and you should be able to summarize the taxability of wages, Social Security benefits, and unemployment to the taxpayer. In the next lesson, we will continue to look at various types of income documents as well as summarizing their taxability.